there's a lot of talk about interest rates rising, the rest of this year and next year, with homeowners who have locked in extremely low mortgage rates. In a rising rate environment, it makes it harder. It makes it even harder to list your house and buy a new one, because now you're moving into a much higher cost mortgage. How much do you see rates rising, and how much do you think that's going to impact just home sales in general in the coming years?
It's a really great question. And as you know, over the last year, we've had rock bottom, record low level of mortgage rates. I have to be honest, I never thought I'd ever see 30-year fixed rate mortgage rates below 3% here in the United States. Well, it happened, and it happened for a whole year. For the last 12 months, the average rate on a 30-year fixed rate mortgage was 2.9%. And there were times when it was down around 2.75%. So incredibly rock bottom, record low rates. And we can't anticipate, we shouldn't expect mortgage rates are going to stay at this really unbelievably historically low level. The decade prior to the pandemic, the average rate on a 30-year fixed rate mortgage was 4.1%. And that was pretty low compared to historical levels of mortgage rates, even lower over the last 12 months. But that just underscores the fact that they're not going to stay at this level. At some point, the Federal Reserve will start to take its foot off the accelerator in terms of accommodative monetary policy, which is the fancy way of saying they're going to allow interest rates to rise, short-term interest rates as well as long-term interest rates. Our expectation is that over the next 12 months, we'll probably see 30-year fixed rate mortgage rates rise about 0.5 percentage point. So in round numbers, currently roughly about 3% is the average rate for a 30-year fixed rate loan. So think in terms of about 3.5% as the average interest rate a year from now. So rates are going up. They're going to be higher than the rock bottom, record low levels of the past year. But compared to historical levels, even if rates go up to 3.5% next year, that's still pretty low. Again, the average rate over the decade prior to the pandemic was 4.1%. So if we go up to 3.5%, I know it's higher than it has been the last year. It's still a historically low level.